These are huge opportunities in the biotech space. First off, read this disclaimer carefully. In this video, we will actually look at some leveraged products. We will look at some sector ETFs. Okay, so let's go here to sector bulls. Given that we are in the biotech space, we will look at the plus 3x biotech ETF from Direction. LABU is the ticker. We will also look at the bearish alternative, and that is minus 3x. LABD, Direction. Okay. As we can see here with the percentage moves, they can move very big. Okay, this one is down significantly. However, if we look at the bullish one, this one is up from the lows. We are talking about plus 295%. Pretty sizable move. Okay, let's now jump into the charts. We will have the XBI, the Spider S&P Biotech ETF, as the benchmark here. So let's do some analysis. These are weekly data points. You can see that we can go all the way back here to the beginning of the post-financial crisis bull market, and up to the all-time high is 631%. If we compare it to the LABU, which is the bullish alternative, then you can see why it is risky to hold these ETFs long term. You can see that this one has seen some rather dramatic deterioration. However, when there is a trend like this move here, approaching 400%. Okay. So basically, you do want to analyze the XBI, and whenever there is an opportunity, let's say a bullish opportunity, then you can go for the LABU. If there is a bearish opportunity, then the LABD is a way to get that leveraged exposure, but of course, be careful with the leveraged products. Okay, so let's do the analysis. We have recently broke out to a new all-time high. That's obviously bullish. However, we are seeing this weakening RSI. Okay, here, strong RSI. Well, it's overbought, but meaning there was a very strong bullish sentiment. Here, RSI is weaker. And here with the all-time high, RSI made a lower high. This recent move has been very sudden, a lot of movement in a very quick time frame. We can see that there are some cycle patterns here as well. If we look here, you can see clear cycles, but as far as the cycle patterns go, after this pullback, there was a disruption in the cycles. And these are the most recent cycles. You see rise, decline, rise, decline, rise, decline. And based on the cycle patterns, we are in the later part of the rising cycle. You can see that when there are rising cycles, the gains are relatively quick, then we shuffle a bit sideways and then we pull back. You see that pattern repeats itself, meaning based on the cycles, there is good reason to think that we have had the bullish opportunity here. Now it's like in the other instances, there is a higher probability of a pullback, meaning a way to trade that with leverage would be the LABD, which is the bearish, ETF. Of course, you could short the XBI or use options. That's also a possibility. But there certainly seems to be that fatigue here, and the history of this ETF is very clear. There are these rising and declining cycles. You have the smaller cycles, and there are also these major cycles. Okay. Let's look quickly at some correlations. So there's a 53% correlation with the S&P 500. That's not too strong. That's sort of like in the Goldilocks territory. Let's now do some correlation studies with the leveraged products, okay? So XBI is now in the background, well, as far as the correlation go. Now let's look at LABU. Okay, this is the bullish one, and you can see that there is 54% correlation with the XBI. That's unfortunate, because that's not much of a... It's a weak correlation. We definitively would want to see that correlation way stronger. If you look at the daily data points, then the correlation do get up to 80%, but still, that means that there is some significant divergence here. You can see here that when there are bullish opportunities, there's a big move, like this move here alone, 252%. That's pretty spectacular, and you can get options on the LABU as well. Looking at the LABD, which is the bearish one, recently you can see that the LABD has been deteriorating. However, if we do see a pullback, then there could be a big move, like this move here alone, 148%. Okay, and based on the analysis we did with the XBI, it is pretty clear that there is an elevated probability of a pullback. It does tend to move in cycles: sharp rise, shuffle, then decline. This is a repeating pattern. Of course, there's no guarantee that it's going to happen again, but there's a probability. There simply is, at least for a breather. To be perfectly clear, if you look at XBI long term, the trend is quite obviously to the bullish side, meaning it's easier to make money being long the XBI than short. However, when there are pullbacks, they are very big, like this pullback here, 48%, which is basically what you could call a bear market. This pullback here was a whopping minus 35%, and with a leveraged product like LABD, that's a pretty substantial gain. To do some further analysis here on the XBI, you can see that the accumulation distribution line is corroborating the rally. So let's quickly look at the companies in the XBI. Okay, so here you can see here are some data, of course. Expense ratio 0.35%. Let's look at the holdings: Moderna, Regeneron, Immunomedics. Various interesting companies. Let's just jump into some expense ratios and fees. Here are some other data, like fund flows, if you look over 6 months. And interesting. There's the ESG score. Let's look at some technicals. Yeah, interesting stuff. If you look at the seasonality, if we look at all the history we have with this ETF, you can see that June, July, these are okay months. You can see that August tends to be weak. But there are very few like super strong months here. So let's remove some of these years, and now we only have the bull market years, post financial crisis. You can see here that July, it is actually one of the strongest months, but still it is a 73%. And then you have the issue with August being characteristically rather weak. So that's something to take into account. But there was some clear cyclicality in this ETF, and if you want to be bullish, you can use the LABU. If you want to be bearish, the LABD. If I were to lean in a direction, especially given that the market is a bit elevated, in particularly the Nasdaq being acting a bit crazy, then I think that there's a high probability of a pullback. That could affect the XBI, Biotech. Let's talk a bit about tracking errors, because we did see that was something that's been a bit of an issue. It is an issue, of course, with ETFs and financial products generally, but more dramatically, we see tracking errors in the leveraged ETF space. And the correlations we saw here with the lab between the XBI the Biotech ETF, and the LABU and the LABD, the leveraged alternatives, they didn't have the correlation we wanted to see. Ideally, you want at least there to be a 95% positive correlation between the benchmark ETF and the leveraged bullish alternative, and the minus 95% correlation with the bearish one. Okay, so why tracking errors? Okay. Expense ratios, they make the net asset value of a fund lower than the benchmark index. Hence, bigger expense ratios could certainly become a big issue. This is something that can be overcome through active management, because through active management you can pick, winners. But generally speaking, managers are not good at beating the market. Another, cause of the tracking errors, that's an imperfect match with the benchmark holdings. And this is in terms of position weight and ease of trade. This can especially be a problem if you have a very specialized ETF, which will have a hard time replicating the benchmark because it's not that easy to just move in and out of positions. Poor liquidity can cause wide bid-ask spreads, also contributing to tracking errors. When there's higher volatility, the tracking errors can compound, given that the biotechs, they move big, generally speaking, and the leveraged ETFs, biotech ETFs, they move really big. Tracking error and arbitrage opportunities. This is one of those things, especially the quantitative investors are into, because when there is a divergence, there is a tracking error, then that is something that can be profitable as an arbitrage trade. But to get into the arbitrage business, you need to have a very good trading platforms, very quick execution, and broad access to the market. You want to be able to get a fill very quickly. When the benchmark index undergoes a change, which happen quite regularly, stocks are taken into the benchmark or taken out of it, that is also something that can cause tracking errors. You also have the issue with cash drag and taxation, because the benchmark doesn't need to deal with that, but a fund must. And especially in the leveraged exchange traded product business, and also commodity ETNs, they use derivatives to get exposure. When you do use derivatives, these are far more complicated products. And as an example, when you use futures, you have to roll them. When you get into swaps and forwards, there's other kinds of complications that effectively will cause tracking errors. Okay, that's basically my take on the XBI and the tracking errors, and the LABD and the LABU. Let's now look at the S&P 500. Okay, well, let's look at the US futures. We do not get the accumulation distribution line. Okay, daily data points. We are seeing some much needed pullback in the market. Been a few days now of selling. So far we are actually below the 10-day moving average here. We haven't been below that since mid-May. This is nothing like dramatic so far. I mean, this is just a regular pullback after a strong rally. But it is a nice change to see that there is some balance to the market, because market was very imbalanced here, very imbalanced here, except here. There was some rationality back in the game here, but then we went from being more reasoned and cautious to just going ballistic. It's going to be very interesting to see this move. Whether we are going to see accelerated selling pressure, or whether we are going to start shuffling sideways when we get to like the 20 or the 200 day moving average. Yeah. And yeah, let's actually look at the Nasdaq, given that the Biotechs play a key role in that one. Nasdaq, you know, it's been seriously overbought. Yeah, it's been super strong, breaking out to new all-time highs. But this one is due for a breather. Hence, there could, given that we did also see these cycles in the Biotech ETF, we've been shuffling a bit sideways now. If we do get, you know, a declining cycle like we have had many times in the past, as we have seen here, and all over the place, it could be quite interesting to either be bearish on the XBI or the LABD ETF, or you could get into the LABD. Okay, whatever you do, of course, you want to let the trend be your friend. The seasonality does suggest, I mean, it is not super strong. It is just that June and, I mean, July is actually one of the strongest months. But when you see here that 67, that means that 67% of months XBI closed higher than it opened. Still, I mean, this is not like, you know, 97%. Yeah. Okay. Let the trend be your friend and be careful.